Greetings. Going to break down Bitcoin using some indicators that I often use. I'm going to introduce them to you, show you how they fit into my general plans, just when I'm speculating with Bitcoin in particular. All right, at the outset, I want to point out that indicators are used differently by a lot of people. The way I use them is I try to observe confluence. For my strategy, using technical indicators is a very broad review across Bitcoin, so that I can have a bunch of factors and I can see if there's a bunch of factors piling up. I know for each one of the indicators that I use, there are people out there using these indicators for their analysis. Confluence means having a whole bunch of different indicators all kind of pointing at the same thing. Of course, this is a noisy mess. I can't look at this and know anything with all of my indicators lit up. So what I have done is I've developed a notational system, you could say, or a way to mark up my charts that allows me to tidy it up and to see all the information that the indicators are giving me without the indicators on the screen themselves. So let's take a peek first at the two super trends. One is faster than the other. I can see where my fast one is and my slow one. And anytime I'm making notations of super trend, I know based on which side of the price it is, whether it's bearish or whether it's bullish. So I'm just going to light those up here. And now those are on my chart. Next, I want to look at the Bollinger Band. However, I want to look at it on a higher time frame, because higher time frame tends to rule, and you can see that there's some good adherence to it. Although you can also say price action itself is what makes the Bollinger Band draw out. But you can see that where this line was, there was nothing about that line to say, oh, price should stop moving when it hits there, but you can see that it kind of did. So there is some forecasting value with it. Sometimes it is the tool giving you the value, and sometimes it's the fact that knowing that other traders and investors are looking at this and utilizing the self-fulfilling prophecy nature of price forecasting, such as when a bunch of people think that when price gets to a certain area that it will go up, well, that's when you're going to buy. So you see buy pressure where indicators are sometimes telling traders to act. So how do I mark the Bollinger Band? I use two trend lines. And you can see, I know this is where my Bollinger Band would be, even though the Bollinger Band isn't drawn there and it's not overlapping with any other indicators. These are two distinct edges. I know that this edge here provides some support value for price action, and this kind of provides an upper limit, generally speaking, to price action. Of course, impulses can push beyond the scope of whatever any indicator says. You can have price action that violates everything that indicators are telling you, but it's whether you're looking at wild price action or tame price action. Tame price action tends to follow the principles of price action in terms of forecasting, but wild price action is reacting to news or whale activities or other manipulations. Here I have a 10-in-1 moving average indicator, and this is going to show us a few things, including the 12-week moving average, which is the yellow line, the 21-week moving average, which is the red line. These two blue lines are the 50-week moving average and the 50-week smooth moving average. Then down here we have the 200-week. So I'm going to draw in the 12-week moving average, the 21-week moving average. This one is an average of the two lines, average, average, average. So I usually put this one just between the two because I want a general idea of where it is. And I have one for my 200-week, and I have a plan what to do if we get down to that, and I get to buy some more Bitcoin at those prices. Bull market support band is a popular indicator that kind of has a crossing component. So green line on top of red line is bullish, red line on top of green line is bearish. The width between the two lines also is an indicator of the strength of the move in the direction you're looking at. Looking at this one here, you can see that that's quite a wide distance between the two. I would want to see price coming back up towards it and seeing the distance between these close before I'm starting to think, are we entering another bullish phase? For this particular one, I use a box because the box allows me to show the relative limit between those two ends. The Ichimoku cloud. There are a lot of strategies involving the Ichimoku cloud. I don't understand all of them, but I do know that the Tenken and the Kijun can be viewed sometimes as support and resistance. Also, the cloud itself. It's often the case that if price enters the cloud, it will complete the move to the other side of the cloud, or it will simply use the cloud as a support or resistance. The color of the cloud also gives you an indicator of which way your trend is going. So we are at the weekly here. This cloud is green because on a weekly scale, we are still moving up. Even though we've had whatever this is, maybe like a 10-15% correction or something like that, overall, this trend just keeps going up. I use this to denote my cloud edge because I'm interested to see what happens when price reaches that. Of course, this line is not an exactitude, but I want the general sense of where this stuff is on the chart. So when I look at it at a glance and do this on a weekly basis, I kind of understand what my ranges are. I also include the Kijun and the Tenken there. Finally, the 8-week SMA, smooth moving average. So now what do we got here? We have all this stuff on the screen, and it is telling me something very significant. When you have this many indicators stacked up in one place, that to me speaks of significant confluence. It's saying that there is a lot of upper resistance here. There's a lot of things here that have to be defeated before we would be considered back to some sort of bullish action on the daily chart. How would you trade this? Well, you'd be looking to take profit if you had seen this area and this was a defined entry for you. So say you're in a long right now and you've seen it come up to here. What's next? Well, you might want to set a portion of your take profit here with some ability to carry on. But when you get up to here, then be asking yourself, well, what would it take to not only blow these away, but then to go above the Bollinger Band high, which is the high range of your current readout? Of course it can go above that, but often is not the case where you see that you see whatever indicator or thing that you're looking at the far end, like the furthest one from where you are, is often what price action will reach towards and then bounce off of. So I would be looking to fully cash out once I hit this. If price goes up after that, then great. But if it doesn't, whatever, I'm out and I've booked profits. I've already booked some here and I booked the rest there. I would be needing another reason, especially moving into blue sky breakout up here. I would be needing a serious reason to be trying to add to my position upwards.